So my name is Simon Brown, and we're looking at ETFs, and the question is whether you should buy them on the JSE or perhaps the New York Stock Exchange. As I said, if you've got questions, drop them into the Q&A box. It's a short presentation today, probably 10 or 15 minutes, because it's not a massively complicated concept, but there are some important points we need to touch on, which is why I think it's worth the presentation. As I say, you've got questions, pop them in. If they're beyond the remit, I'll come to them at the end. If they're time specific, we will pick them up as and when. Legal disclaimers, of course, very important. First point is the platforms. So if you're looking for JSE ETFs, then obviously you buy them as standard online share trading. You might buy them in your tax-free account. That might be sitting within internet banking or standard online share trading. And if you're wanting to buy the offshore New York Stock Exchange, then it's Standard Bank Webtrader, which is their offshore trading platform, and both give you access, Webtrader, to numerous exchanges. Some issues around that I'll touch in a moment in terms of currency conversions, and obviously the JSE, nice and simple. The question, a large part of it, is that range of ETFs. And the JSE has some 100 ETFs and exchange-traded notes, a good local offering, a fairly wide offshore offering. I was chatting with my colleague, Christia van Heerden. We did a podcast around sort of the one global ETF to rule them all. And at that point, there were really only two. There was what was then the Deutsche Bank MSCI World Developed, and there was the Ashburton 1200. We liked the Ashburton. It was slightly cheaper in terms of the total expense ratio. Also gave you about 7% emerging market exposure. Point now is that, we've now also got, so Signia now owns what was the Deutsche Bank. Satrix now has a developed market as well. There's the core shares, Global Dividend Aristocrat, which is a global with about 7% as well into emerging markets. There's the S&P 500, Signia S&P 500. There are a couple of S&P 500 funds, but the Signia at 0.16% total expense ratio is the cheapest. So we can do a lot within from the JSE. New York, of course, over 1,200 ETFs. And if you want niche, if you want a marijuana or I was going to say crypto, but there isn't a crypto. But if you want a marijuana ETF, if you want India, which is one I get asked about a lot, if you want healthcare, if you want biotech, if you want to start moving into really niche ETFs, then absolutely New York is your space. We just don't have that in South Africa. And whilst we might at some point start to see very niche ETFs in South Africa, it's going to be a long time, and it's because, frankly, how many South Africans are going to want to buy an ETF on marijuana stocks or on India or something? Is that market big enough? And the short answer is, I think not. So Peter's on about the sound. Peter, I've got issues with my internet. I'm on backup. We are recording. You can grab the recording, which is done locally, so we'll be fine. I am aware of sound not awesome. David, I'll talk about other stock exchanges in a bit. So New York really gives you space to niche. Of course, this raises the question, and I've mentioned it before, which is, okay, so passive in of itself is not passive because you've got to choose your ETF anyway. But if you're going sort of and getting some marijuana and some biotech and everything, we're becoming very active within our space. So there's questions around that. But certainly, make no bones. I was chatting with Narina Visser last week at a JSE event, and the range of ETFs in South Africa compared to where we were 10 years ago is giant. 10 years ago, we had probably a dozen or so. 20 years ago, of course, we had zero. First ones came December 2000. So we think 100 is great. It is. Man, New York. I remember opening Webtrader for the first time and being so overwhelmed by the range of stocks. I thought I'll look at ETFs only. There are more ETFs than we have shares, and that frankly freaked me as well. So I just moved on. I'm just like, okay, thanks, but it was frankly just complicated. But certainly New York has range. David's asking about other stock exchanges. So New York undoubtedly has the biggest range. Some folks, a friend of mine where I live, he goes and he buys a global ETF in Ireland for tax treatments and the like. Yeah, I mean, but I would almost imagine that outside of tax, but let's just say in terms of the different types and thematic ETFs and the like, I would be surprised if something you want is available somewhere and not on New York. So New York offers you all of that. And there's other challenges about multiple exchanges, and we'll come to that in a little bit as well. Touching on the costs, so there are different fees. Obviously, you've got your transaction costs. Watch out for your minimums. Standard online share trading has minimums and the like. Transacting in the US the minimums can be a little more expensive because they're dollar-based, is the simple answer. You've also got holding fees, admin fees, platform fees, call them what you will. JSE via online share trading is a flat monthly fee, waived if you do 3 transactions in a month. Now, don't go and make the, don't go and guarantee, do the 3 transactions just to save, because you'll probably pay more on. But in a normal course of a year, you'd probably find 1 or 2 months where you at least do 3 transactions, particularly around tax-free bonuses, etc. But certainly on a larger portfolio, JSE is probably going to be cheaper because of a flat fee. Let's say you got $1 million. You're paying the same fee on $1 million in a JSE portfolio as you would on 10,000 in a JSE portfolio. Whereas in New York on $1 million, you would pay a lot more than you would if you had 10, because it's percentage based, calculated daily, charged monthly. And then of course there's a cost of moving money to the US or to whatever the exchange is, and then moving back again. And that is a cost. You've got not just the cost of transaction, you've also got the cost of spread and the like. And that fee is a lot less than it used to be 10 or 20 years ago. If you use something like the Shift app, it's cheaper still. In terms of SARS, your first $1 million, no problem. Up to 10 million, the next sort of 9 million, you need authority, you need clearance from SARS. If your tax affairs are in order, no problem. That is a one-off cost, but it is not an insignificant cost. It's a percent or 3, whatever it might be, upfront. So you lose some money, some sort of a drag on your cash right up front. But that's not an ongoing fee. You move money. The trick being is, again, watch the minimums. So maybe if there's minimums, it might be better to do once a year rather than on a regular basis, rather than monthly. Bulk it up locally and move it. But it's a one-off, so it's there. It's definitely a fee, but it doesn't stress me very much in terms of fees because it is a one-off fee. And the Shift app, SHYFT, if you're a Standard Bank customer, is a great product for moving money, and the others might have as well. Obviously, the total expense ratios, total investment costs, etc., the US is mostly cheaper, and that is just a factor of scale. Now, some of the very small niche ETFs, I remember there was a social media ETF about 5 or 6 years ago. Their total expense ratio at a time was running at 1.5%. That is expensive. But on your large generics, there's some funds now running at 0. But your VOO, which is the Vanguard S&P 500, largest ETF in the world, or one of the largest in the world, 0.04% total expense ratio. Compare that to the Signia 500, which is our cheapest S&P 500 fund locally, 0.16. Now, don't get me wrong, 0.16 is monster cheap, but it's 4 times. Our cheapest ETF in South Africa is the Satrix 40, which is now 0.1%. And that's still 2.5 times. So, what the beauty of the price wars that have come along is that we're quibbling over fractions of a percent. The difference here is 0.12%, 0.12% difference on the TER of these two. That's a great place to be haggling over. Absolutely it is. Now, to move the money to the US to buy the VOO, you're going to spend a couple of percentage points. Let's say it costs you 2% to move the money. Okay, so now you're 2% behind. It's going to take you at a 0.12% difference. It's going to take you 8 years before you're actually at the same point. If you got an upfront cost and then the higher cost at Signia locally where you didn't have the transaction fee. So it's not just around the TERs. There's the other fees as well. There's also spreads. Difference between buy and sell price. On the JSE, they at times can be fairly wide, a little bit onerous, and certainly they are a cost. Again, like moving currency. They're a one-off fee, they're upfront, and then again when you exit the position. But there are certainly a fee. The US doesn't have market makers as we have here. Certainly there are some market makers in the US, but where each of our issuers in South Africa, each of our ETF issuers will actively have a market maker who makes markets for them. In the US, this is not the case. What happens is third parties might go and make it as something where they can earn some profits off doing the market making. So no market making in the US, but again, on your giant ones like the VU, those spreads are going to be minute. But as soon as you start going into the thematic, the more niche ETFs, well, then you start running into the issue of lack of market maker, trading at above or below fair value, wide spreads. Again, that social media ETF, in fact, I think it might have been as much as 8 years ago. Not only was it a 1.5% TER, but it sometimes had a spread of 4 or 5%. That is massive. And this is back to this slide here. The US has everything. The question around those thematics is, should we be doing them? Because now we're trying to be active. And what happens if you decide that marijuana is the future and the world decides, nope, it's not, and it ends up that something else is the future, or suddenly there's a change? And I know what it's a bad example, but you get my drift. But you're also going to hit higher TERs, you're going to hit higher spreads, and you might pick the wrong hot new space. Certainly biotech's done brilliant, but it didn't always, and it won't always. So the extra width to me, actually, the breadth of availability at times, actually, I think is not a good thing. So certainly it's easy. The costs in the US are a little bit cheaper. The range is significantly wider, although be careful, as I said. But what about death and taxes? So you got CGT. Only when you sell, and that's regardless whether you're JSE or New York, you sell at a profit, you're going to pay tax on that profit. Only when you sell, it is first 40,000 every year is tax-free, and then 40% is added to your income. So it is max. If you're at the earning over 1.5 million and paying 45% income tax, you'll pay 18% CGT. For most people, it's sub 10%. Just simply because your tax rate is not that big. You've also got dividend withholding tax on the JSE that hits in at 20%. Don't forget, of course, your tax-free account. 33,000 a year, 500,000 a lifetime. I always say your first 33 per year that you invest should go into your tax-free. When that's maxed out, then you can start looking elsewhere. So then you pay no CGT and you pay no dividend withholding tax whatsoever. So that's a biggie. But here's the other thing. New York, CGT is payable in South Africa. So when you sell, you're going to pay CGT anyway. So you're not going to avoid the CGT. That's moot. You're going to pay the CGT. Dividend withholding tax in the US, yep, that's cool. You pay it, but you can go to Globe Tax and pay them a fee. I think it's $35 for 3 calendar years, and they will claim that back for you. Because you're a foreigner. At the moment, I think you can claim back 15, so you end up paying 5% DWT. An important point is that some of our offshore ETFs, whilst they could claim the DWT, are not claiming it simply because of scale and cost and everything else. So certainly the CGT is still payable. You're not going to get away with that. And you're going to pay it in ZARs and rands in South Africa. SARS is going to want it. So you're either going to have to remit money back to South Africa to pay that CGT, or you're going to have money in South Africa to pay the CGT. And of course, tax-free accounts, you can't use them on New York listed assets at all. So that is totally moot. But here's a move. And this is so important. So let's say you make $10. Let's say you make $1,000 CGT in the US, and the exchange rate is now 14. So that is therefore 14,000 ZAR that is CGT liable. Your first 40 is free, but it's the dollars multiplied by the exchange rate. But here's something currency moves. ZAR weaker creates a taxable profit in South Africa. What I mean by that, let's say you've got an S&P 500 ETF from Signia, and let's say that the S&P doesn't move, but let's say the ZAR goes from 14 to 28. In other words, the ZAR crashes from 14 to 28 Rand per dollar. Your Signia ETF will double in value, and you have to pay tax on that double in value. However, if you'd moved money overseas at $14 and bought the VOO and the Signia doesn't, the index doesn't move, but the ZAR crashes from 14 to 28, you don't have a tax event. Does that make sense? It's important. If the money's in the US, the change in the currency doesn't change your tax. If the money's in ZAR in South Africa on the JSE, it does have an impact. And that impact can be significant. Now, when you exit, you're going to have your profit at the higher price. So then if you buy the S&P at 14 to the dollar in the US and you exit at 28 to the dollar in the US, S&P hasn't moved. You've made money when you bring it back to South Africa, but there's no tax. But if the S&P's moved, that profit will now be worked out at 28 to the dollar, not 14. But you get the point I'm making here, is that essentially if you're in New York, you save the tax on the currency weakness. And over the long term, the ZAR will weaken against the dollar because of the difference in our inflation rates. So that starts to become real. And to my mind, this is the big reason why to invest in New York in dollars. You know, the range doesn't impress me. The difference in TERs, yeah, but you know what? With those upfront fees and our TERs are going lower, I don't need thematic. I don't want to go into little niche funds, etc., etc. But to me, this is the biggie, is that the ZAR will weaken over time. And if you're in the US, you won't have to pay tax on that weakening in the ZAR. But then what about death? So in the JSE, you die, it's part of your estate, normal estate duties, etc., everything else. If you've got assets in a different jurisdiction, you need a will in that jurisdiction. So if you've got money in US dollars in New York, invested in the New York Stock Exchange, you need a will for your US assets. Most people are unaware of that fact. You now need a will drawn up. Can it be done in South Africa? Sure. Can you get someone to administer it from South Africa? Sure. But in my experience, you're typically going to get someone in the US. You've got to find them. You've got to pay them. And then you've got any US estate duties are also applicable. Question coming through is, do you pay estate duty twice? Perfectly honest, I'm not sure. So you would pay US estate duty. That money I would then disperse to your heirs. As I understand it, would not then attract estate duty in South Africa. But you do need that extra will. So if you've got a large amount of money overseas, well, that makes sense. But if it's a small amount of money, well, now you duplicate. Now you're running into all sorts of issues for what are gains, but are they just modest gains? How big are those gains? So for my mind, this is the big reason not to go offshore, is because of that need for an extra will. And certainly if you're moving $1,000 or maybe even $10,000, you've got to give it some serious thought if it's worth the extra admin, if it's worth having to have two estates and the like. And that question, could that the money in New York, where would it be paid? It would be paid to your heirs wherever they wanted it. So it could be paid in New York in dollar, could be paid in Paris in euros, could be paid in Bloemfontein in ZAR. It's up to the heirs who are receiving it. Peter's asking, does US assets apply to Webtrader too? Yeah, Pete, because Webtrader you are offshore. That money is physically moved off to the US. So those assets now sit in America. And ergo, you need an American estate, an American will for your estate. And that's a significant point that I think is very, very important and often missed out. So offshore currency, an important point, the point is, what currency are you in? Now, David, what about other exchanges? My question is about alternatives to New York is driven by wanting to keep away from the IRS. 100%. I hear what you say. So the question that David's saying is, well, what about maybe, and I know a lot of people who go to Ireland, and they say this is way better, et cetera, et cetera. Sure. I mean, I used New York as an example. Ireland has obviously a smaller range, less thematic and niche, and the like, ETFs. But many folks will say to you it is simpler. The point is, if you're going to Ireland, make sure your account is dominated in euros. Otherwise, if you're in US dollars, every time you transact, you've got an extra cost of moving your dollars into euros to do the transaction. When you sell, the euros need to go back to dollars again. There's a transaction fee. So pick a jurisdiction, pick a currency, and say to Webtrader, I want my account dominated in this currency, and then transact in that currency. and make, and so you don't have those constant fees in the equation. But truthfully, as soon as you start heading to the global exchanges, and one could go to the FTSE, one could go to the DAX. To my mind, it's New York or it's probably Ireland. Those are the two that I would be considering. Ireland, as I said, less range, but a range that is certainly bigger than South Africa. TERs are really, really cheap. And from folks I know who have assets there, they would say to me that it is a painless and easy tax experience. I don't have experience of it, but you want to avoid those switching costs. So in closing, offshore ETFs in the New York, typically cheaper, although we're starting to split hairs. JSE range is good and often cheap-ish. Very cheap compared to what we used to have, but not cheap compared to New York, although we're haggling here about fractions of a percent. But lots of buts. You're going to have to will for your US assets. No tax-free accounts in New York. You've still got your tax-free in South Africa. Big benefit, obviously, is you exempt yourself from the currency. So my sense is, now, if someone says to me, should I physically have money in New York to buy ETFs? My answer is, how much? And if it's a large enough amount, and I'm not saying today, if you're 25 years old and you're like, man, all I've got is 2,000 US. Okay, but if you're 25 years old, let's assume you're going to live to your average age somewhere in the 70s. In 50 years' time, your 2,000 US is no longer going to be 2,000 US. You would have added to it and it would have grown. So it's really, how big will your US assets be at your expected death? I appreciate you may die early, and if you're 25 and you've only got $2,000, you still need a will in the US. But what's it going to be when you're expected to die? That's your expected date of death. So you've certainly got some time around that part. Seeing some questions. Yeah. So Desmond, at what amount? So my view is that when your estate has been wound up, you probably want at least $100,000 maybe at least $100,000 which is currently, call it 1.5 million ZAR, as a minimum. But as I was saying, if you're 25 now, that 100,000 is when you hit the estate time. Question, what happens if you're looking to spend offshore? Absolutely. So that's a big deal. I always say to folks, the key benefit of having money offshore is if you're earning or spending offshore is one of those biggies. Is large enough, David? Same sort of question. So to me, it's about 100 euros, dollars. It's probably about 100K. And that doesn't need to be, and I stress this point again, it doesn't need to be the money that you transfer today. It needs to be the money that you expect to have when you expect to die. So if you think, and run a life expectancy of somewhere in the 70s. So what have you got now? What are you expected to be when you are expecting to die? I appreciate curveballs, and those curveball calls could go either way. What happens if you die without a will in the USA? Usual story, you die intestate. It goes to spouses, it goes to children, it goes to parents in that order, if I remember correctly. It just makes a will more complicated. And they will have to place adverts and all of that sort of thing, a lot more adverts, etc. So it's not that you lose the money, it's that dying intestate is just messy wherever you might happen to be. Question, can you Google and find a US will? Sure. I mean, I've got a South African will, and in fact, I've got a template and I send it to people. A will is a simple will, is a very, very simple thing. We can, of course, make those wills as complicated as you want. The thing being is, it depends on complexity. If the will is quite simple, if I die, it goes to my partner. If they're dead, it goes to my kids. This is my partner's name, contact details, ID number. This is my kids' names, contact details, and ID number. Well, then boom. Then you could probably find a fairly simple will. Upon your death, you then need someone to be the executor. Question coming through is, could Standard Bank, who have offshore bank accounts, etc., could they be the executor for your offshore will? It's a great question. I don't know the answer. Phone them up and ask. So this would be Standard Bank as opposed to online share trading. It's not their business, but Standard Bank Wealth, who do all sorts of bits and pieces and can invest for you offshore, could they do you an offshore will? Quite possibly. Could they then be the executor for that offshore will? Very probable. I would be surprised if not. So that might be an easy thing. Does the US will apply to shares bought through Webtrader? Yes, it does. Yeah, so Desmond, I mean, yeah, same question. Does Standard Bank handle offshore wills? Why not? I mean, they manage wealth, they manage offshore wealth. Wills are those. It had never occurred to me before. So quite possibly it does. Kenneth, does Webtrader have a firm like Globe Tax to assist with US will? I don't know that Globe Tax does wills. I think they're just doing tax for non-US nationals who are earning tax in the US. I'm not sure that they are doing wills. My first call would be to speak to Standard Bank locally. How much can I put on offshore ETF JSE? So in the local market, there's no minimums whatsoever. In New York, there's no minimums either. Typically, the answer is about minimum of 10,000 ZAR or $1,000 to really get efficiencies. Merrill, buy offshore ETFs in your tax-free account. Do you pay dividend tax and income tax and interest in the country where the ETF is domiciled? Yes. So the short answer is that is claimable back, but not by you. It has to be done by the issuer, and the issuer is not. Truthfully, it is a small amount, but it does mean that there is some drag on that tax-free component. You know, it's 20% of dividends. Let's say dividends are 2%, so it is 0.4%. It is modest, but yes, there is some drag. Muriel, you are correct. David, your advice from current experience with your state department of a different bank: stay away from institutional estate departments. David, that's my experience too. There is actually, and now I can't remember, there's actually a company in Joburg. I mean, you know what, guys, hit the Googles, but then don't just blindly go. I mean, is there somebody in Joburg, Cape Town, Durban, Bloemfontein, and Potchefstroom, and everywhere in between who does offshore wills and offshore estates? Of course. Find them, speak to them, get references, verify them. You know, we don't need to be phoning New York for this. Mike, at what value do you start paying estate duty in the US? I was hoping no one would ask me this because I truthfully have forgotten, and it is chunky. 350,000 US dollars, I think. It is chunky. I mean, you know, it is, let's ask Google quick. Inheritance tax. Hey, oh, that's federal. So federal is not applicable. This is not applicable. Why do they make it so hard? Wikipedia. So federal is not applicable because you don't live there. Inheritance tax estate of the deceased, but by the inheritors, exemptions amount vary, ranging from federal amount index for inflation to New Jersey, which is really, really low. Which states how do estate taxes work? I'm not just finding, yes, an estate has to pay tax. Okay. You know what? Google should be simple, but it often isn't. Mike, my memory seems to say it was 350,000 US, which is currently, what's that, over 5 million ZAR. Which are the offshore ETFs on the JSE? Drop me a mail. I will send you a giant list. I will send you my mail, which is simon@justonelap.com. And a recent article I wrote for FinWeek about my preferred very, very broad ones. Mike, you were way ahead of me, and so it's only 60,000. Okay, so Mike says only first 60,000 is exempt from estate duty in the US. That is approximately 1 million ZAR in today's money. That is not very much. The US loves tax. So 60K. Thank you, Mike. You're a star. I should have looked before I Googled, or maybe you just Googled more efficiently than me. David, if you're large enough investment or long-term expectation, offshore trusts, yeah, I mean, absolutely. I'm not even going down the road, but there's a lot we can do about offshore trusts, and they're much smarter. I will put my email into the chat. It is simon@justonelap.com. That should have hit everyone there right now. Oh, no, well, there are my, so if you go to simonbrown.co, on my vanity website, you'll find all my contact details there. Ladies and gents, I see questions are gone. Oh, no, they're not. I'm just in the wrong space. Let me go back to questions. Johanna, I just sent it there. Mark, my pleasure. Ladies and gents, we'll park it there. So certainly, as I said, short, simple, but there's a lot to think about here. And there's a lot more moving parts than just, hey, let's go buy the cannabis ETF because, hey, surely everyone in America is stoned. There might be, but that may or may not be the future. Ladies and gents, really appreciate your time today. We'll be back again next month once all these short weeks are behind us. I personally love them. I know people complain, but hey, I'm always a big fan for short weeks. Everyone have a good day further and enjoy your long weekend. Cheers all.